Esteemed guests, ladies and gentlemen, with all protocols observed, welcome to today's panel session, hosted by Africa50 at the occasion of Market Days of the Africa Investment Forum. We thank you immensely for your presence. I'm Iman Alami, Director for Fundraising and Investor Relations at Africa50, and I will have the pleasure to facilitate the first panel of this important discussion. But first, please join me in welcoming Mr. Alain Ebobisse, Chief Executive Officer of the Africa50 Group. Thank you.
All right. Good afternoon. Thank you, Iman. Thank you, dear colleague. Ladies and gentlemen, good afternoon. It's just after lunch, so I hope we're going to create some energy so that nobody dozes off. I'm extremely pleased, of course, to welcome you all for this important session, which is focused on a very important topic, I would say, which is ways in which we can unlock institutional investment into African infrastructure. So this is one of our critical objectives at Africa50. We have three pillars, which is developing project, investing in project, and also mobilizing funds from institutional investors from within Africa and globally into African infrastructure. So today we have two insightful panels, which will unpack the theme that I've just mentioned. The first one, which will be moderated by Iman, will focus on ways in which we can mobilize greater allocation from institutional investors in Africa and globally into the continent's infrastructure. You know, in Africa alone, my chairman, Dr. Akinwumi Adesina, president of the African Development Bank, always mentioned this figure. It's an important figure. In Africa alone, institutional investors are managing $2.3 trillion of asset under management. So if we can, you know, tap a small fraction of this, that will help us really bridge the infrastructure gap. The second panel will tackle more specifically renewable energy infrastructure and ways in which we can unlock capital to increase access to reliable and sustainable electricity in Africa. This is indeed, for the continent, very important to be able to bridge the access gap. And this aligns very well with the Mission 300 initiative, which President Adesina and World Bank President Ajay Banga recently launched. And this is very, very exciting initiative. Now, very briefly, I would like to introduce the first panel. These are very prominent speakers. I'm very excited and honored that the speakers that I'm going to be listing have agreed to speak. In fact, when we were asking them to speak, we were saying, oh, I'm not sure whether they would accept, but they did accept, starting with my dear sister, Butimilo, CEO of Development Bank of South Africa. Thank you so much for being here. You lead a very important institution, DBSA. And you're also a strong partner to us at Africa50. I think your passion, how you express the support to African continental initiatives is something which is really heartwarming. So thank you very much. We'll be signing later an important milestone with DBSA. Thank you again, Butimilo, for accepting to join this panel. And next on this panel is Armando, my brother. I just met with Armando again in Luanda. It was 2 days ago or 3 days ago. He flew here, he accepted to come, and Armando leads Fundo Soberano de Angola, the Sovereign Wealth Funds of Angola, a very important initiative, a very important institution, I should say. Again, a strong African institutional investor, and I'm very happy that under Armando's leadership, following His Excellency President Lorenzo's guidance, Armando is also looking at expanding Fundo Soberano investment across the continent, not only in Angola. Thank you very much, Armando, for being here. I'm also pleased to, you have something to suggest? Okay. I thought she would ask me that I forgot something, which she can always say, so that I don't forget what I'm supposed to say. I'm pleased to welcome also Badea on this panel. It's very important. Monsef, thank you. Merci d'être là. Badia is a very key partner to Africa 50, and it's a very important institution, especially what Dr. Sidita, the president of Badia, mentioned earlier, to mobilize funds from the Arab countries into Africa infrastructure. And last but not least for this panel is my esteemed brother, Solomon Quaynor, VP, Vice President for Infrastructure at the African Development Bank, Infrastructure Private Sector. You know, Solomon, it's fair to say that for us at Africa 50, not only AFDB, the African Development Bank, is the sponsor of Africa 50, started the organization, but many of the things that we've done, we could not have done it without the support of the African Development Bank, and really of your personal leadership, Solomon. I can mention many initiatives, but the Acceleration Fund, the AFDB Euro team was the anchor investor, the ASIA, the Alliance for Green Infrastructure in Africa, $400 million of project development fund that we, Africa 50, will be managing. We're expecting to achieve first close in December or January. We could not have done it without you. We are extremely grateful. I'm not saying that because you're in the room. I will say that even if you're not in the room, but since you're in the room, I say that because you are an extremely good partner to us. Now, for the second panel, let me just introduce the second panel, and then I would stop here and sit and listen. It's also a great panel. We are partnering on this panel with the International Solar Alliance, which is represented here by the Chief Operating Officer, Joshua Wycliffe. Thank you, Joshua, for being here. Please give my regards to my good friend, Director General, Dr. Ajay Mathur. I know Ajay wanted to be here, but Ajay couldn't be here, so please convey our extreme gratitude for the partnership, the strong partnership that we have between Africa 50 and the International Solar Alliance. So this panel will also feature other partners, the EIB, which will be represented by Ambroise Fayol, is also a good friend, the Vice President at EIB, that will be part of this panel, talking about renewable energy and financing green power in Africa. On the same panel, we have my dear friend, Anita George. Anita has been my friend for 20 years or so, from our days at the World Bank Group at IFC. And then Anita, of course, you are a relentless supporter of private investment in infrastructure in emerging markets globally, when you were at the World Bank Group at CDPQ, and now you're advising ISA. Thank you very much for really attending and sitting on this panel. My friend Youssef Roussi from Attijari Bank. Attijari is a good partner to Africa 50. We are very thankful for a partnership in helping us raise funds for the Africa 50 Infrastructure Acceleration Fund, and we look forward to working again together to mobilize funds to finance Africa infrastructure. And last but not least, Daniel Schrott from the African Development Bank, an extremely important partner. I mentioned African Development Bank earlier, but Daniel, you particularly as the leader of some of the major renewable energy initiatives at the African Development Bank, Desert to Power, CEFA, we believe your role is very important, and we look forward to working with you, especially on the Mission 300 initiative, because we need to connect Africans. We need to do so, and we thank you for your support in advance. So this is what I wanted to say, just to introduce the panelists, because we are grateful at Africa 50 that you have accepted. Your time is valuable. You have accepted to join these panels. I wanted, on behalf of all my colleagues, to thank you wholeheartedly for your support and for joining these two panels. Thank you. Now, I should... okay, EDM is here. Okay, EDM is on the panel, so I don't have it in my note, but I would. I believe in the second panel, we also have Eletricidade do Mozambique. We have one of the executive directors from EDM also has accepted to join the panel. EDM is a very important partner to us. We are developing one of the first transmission line PPPs in Africa. In fact, with the EDM, we are also developing the first large-scale floating solar power project in Africa. We're co-developing this with EDM in Mozambique. So very important partner. Thank you, Fleur, for reminding me that I should also mention EDM, and I should have done so. My apologies. Thank you very much, everybody.
All right. Thank you again, Alain. So today we tackle a critical question. How can Africa unlock the infrastructure investment it needs to thrive? Bridging Africa's $180 billion of annual infrastructure gap demands bold solutions, de-risking strategies, innovative partnerships, and mobilizing both global and African capital are essential to building confidence and a pipeline of bankable projects. We have an exceptional panel to explore how we move from ambition to action, putting Africa at the center of the global infrastructure conversation. With that, let me introduce and welcome to the stage our incredible group of panelists. We have Ms. Boitumelo Mosako, Chief Executive Officer of the Development Bank of Southern Africa. Thank you. We also have Mr. Solomon Quaynor, Vice President for Private Sector, Infrastructure, and Industrialization of the African Development Bank. Thank you. We have Dr. Armando Manuel, Chairman of Fundo Soberano de Angola. I hope I said it correctly. Thank you. And finally, we have Mr. Monsef Klouch, Advisor to the President of the Board of Governors, Arab Bank for Economic Development of Africa. Thank you. But before we start the conversation, I would like to invite you to discover a brief video presentation on the infrastructure opportunity in Africa, prepared by the Africa 50 teams. Thank you. Testing? All right. Okay, let's dive in. In the video, we've seen that Africa represents a huge opportunity in terms of investments, but is not receiving enough funds to bridge the gap in key areas such as infrastructure. So to start off the conversation, I'd like to turn first to Boitumelo. DBSA is one of the largest DFI on the continent, with a solid track record investing in infrastructure. From your perspective, as an African institutional investor, what do you believe are the biggest misconceptions international investors have about Africa's investment landscape? particularly in infrastructure? And how can we address these misconceptions effectively?
Okay, how do I do this? Thank you, Iman. Firstly, I would like to thank my dear brother Alan and the Africa 50 team for the opportunity and the invitation to be part of this panel, and thank my esteemed panelists in this discussion. You know, Iman, we are all aware of what those challenges are, and the first one I would like to mention is the whole perception around risk. Africa is perceived to be risky from an investment perspective. However, the reality of it is not the case. And I think, President Adesina even showed the default rates across various geographies when it comes to infrastructure projects. And I think the challenge is, there isn't enough awareness and knowledge on actual data when it comes to African investments. And this is a gap that we actually, need to fill when we engage with investors outside, in and outside of the continent. So I'm of the view that there's a data and a knowledge gap that needs to be filled in this regard, so that people can be aware, can come to the knowledge of the real risk that exists within the continent. And I'm also cognizant that the continent is not, it doesn't have challenges. It does, but therein the challenges lies the opportunities as well. So that's the first thing I'd like to raise. The second thing is, the lack of bankable projects. And you will find that as I mention these challenges, I will also give examples of how we are solutioning as a continent to address these. It's bankable projects, lack of bankable projects. For instance, when I look at what we do as an institution, we've allocated financial resources, we've allocated technical capacity, we have partnered with other institutions to raise project preparation funds and to actually, invest in project preparation and getting projects to bankability. There are two institutions on the continent that have distinguished themselves in addressing this issue around bankable projects. I have the opportunity to be invited by one of them today in the form of Africa 50. Africa 50 has invested a lot in getting the best, from the world to actually, come and formed a team that specifically, focuses on project development across the continent. And we have seen the many, projects that are being developed and implemented, and Alain touched on a few of those. On the AFC side, we have seen the project development in the Lobito corridor. The third thing that I'd like to mention is the enabling environment, which talks to policy, uncertainty, regulation, in the various countries. And I will make an example with South Africa here, where South Africa decided, when it came to the renewable program, to create that enabling environment through legislation with the Independent Power Producer Program. And that program, and actually providing that, that policy uncertainty, and providing the certainty, it actually created a big opportunity for, firstly, private sector participation in the renewable energy space and enhancing the energy security for the country. the private sector itself invested in the project preparation of all those projects. So that element of an enabling environment when it comes to regulation, not only does it mobilize, project finance, but it also mobilizes the preparation that then has to come with it. What did we see in that space? There's over, $20 billion of investment, in that space. And this topic is about institutional investors. You'd be glad to know that 90% of that money came from institutional investors in South Africa to fund those various programs. So just as much as we are highlighting these challenges, and now we have seen how these models have worked across the continent. We know that these models work, so now it's just a matter of making sure that as Africans, we showcase what is possible to the investor community. The business case for investment on our continent is there. We just have to make sure that even with the challenges that I've mentioned, I've also mentioned the solutions that we have come up with, we just need to showcase and keep on persisting as the investment community, as project developers on the continent. Thank you.
Thank you very much, Boitumelo. Now let me turn to you, Solomon. From your perspective, what innovative tools or initiative has the African Development Bank implemented to de-risk investments in Africa? And how can these be leveraged to attract more private sector participation?
Okay, thank you very much for the question. I think for those of us who've been operating in the infrastructure space in Africa, we all realize that the biggest challenge is a dearth of bankable projects. So to be honest, the best innovation that we've done as the African Development Bank is to realize that we cannot be doing infrastructure project development on an ad hoc basis, and this is really why we helped establish Africa 50. So that Africa 50 can really do this on an institutional basis. So I would say that that has been probably the most important. And we're taking it a step further. So this is why Alain was talking about the Alliance for Green Infrastructure in Africa. For those involved in project development in Africa, you know that it takes about 7-8 years, and that's even optimistic, right? So what we're trying to do is we're trying to do not just infrastructure project development, but green infrastructure project development at scale with speed. So this is why we're establishing the Alliance for Green Infrastructure in Africa as a platform in partnership with Africa 50. 400 million of that is for project development. So that's what I call in the fence project development. 100 million is for project preparation. And that is more about the enabling environment. Okay, we're going to have governments that have to, so for example, if it's an IPP project, there's a power purchase agreement. You have to have confidence as an investor that when the dynamics change and tariffs need to be increased, that government would really comply with that. So we also have to work on the environment, which is what I call beyond the ring fence project development. So for us, that's important. Now, we as AFDB even take it one step further. We have what we call policy programs, program operations. We finance governments, and so when we finance the governments for critical strategic sectors that government wants to work on, we put in really what you might call conditions, but I would describe them really as areas to support government in those strategic sectors. So we embed that into what is essentially a budget support lending that we provide as as AFDB. Now we take that one step further. We have a financial instrument. I'm now going to begin to shift to the financing side, because de-risking is not only about establishing the project itself, but it's also about giving lenders confidence to actually fund the project. So we have what we call the partial risk guarantee. A partial risk guarantee essentially leverages the African Development Bank or an MDB's entire program with a country. So it then means that if government does not comply with its obligation in contractual agreements, such as the power purchase agreements, it puts at risk the entire program that it has with MDBs. So it's really a very powerful leverage factor. So we use that to counter-guarantee government obligations on some of these key infrastructure projects. Now, the last one that I'll quickly mention is the partial credit guarantee, especially I do see my sister, Anita George here. I worked with her on the first partial credit guarantee that we did in Africa at a subnational level for the city of Joburg. Anita, could you stand up, raise your hand so everybody sees? So she's an old Africa hand, yes. So the partial credit guarantee is not necessarily a new instrument, but what we're trying to do nowadays, especially as the African Development Bank, is instead of funding ourselves, we will use the partial credit guarantee to crowd in commercial lenders and other lenders. And this could also expand to institutional investors as well. So these are some of the innovations that we're working on really broadly to de-risk the infrastructure space so that we can really not just get a few projects done, but we want to do it with scale and with speed.
Thank you so much, Solomon. And still in the topic of de-risking from the standpoint of BADEA, because it's a topic that's too important not to overlook. What roles do multilateral institutions play in de-risking African projects? And are there any new tools or instruments you believe can further build investor confidence?
Thank you, Iman, and thank you to President Bobisse and his team for his invitation to this conference. His Excellency the President expresses all his apologies for not being here, but as you know, we are a long-term partner, and we are very, very excited to be here and participate to these discussions. I wanted to just maybe, in terms of de-risking, refer to what my sister Bochilemo just said about the lack of data in infrastructure in Africa. Are we getting a fair shake in Africa in terms of the actual risk to investors? And now we're starting to get some data. In fact, there is a study from Moody's, which is not known to be biased towards Africa in general, that basically says that, in fact, the recovery rates for Africa is actually much better than any other continents. So I think in terms of the DFI and the roles that we play, one of the first things that we have to insist on is exactly what we're doing here today, is this policy advocacy role that we do to basically talk about Africa and show that the risk is not only not as bad as what it seems when you look at the ratings or when you look at the credit spreads of African sovereign, but in fact, in some cases, it's actually better. And so I guess this is our role as an institution to work together and preach the good cause and actually show that the numbers as well are telling the same story we've been saying all along, that Africa is the region to invest if you want to not only do good, but also provide some good services for Africans. So that's the first point. I think that the second point that we've seen as well in terms of the roles of DFI, traditionally, for those who don't know BADEA, but we've been in action for the League of Arab States since the 1970s, so it's been 50 years. In fact, we're celebrating a 50 years anniversary this year. And most of our operations have been centered around infrastructure, because we realized this would be the most difficult to have on a commercial basis in Africa. And we've been investing in roads and infrastructure, soft and hard, 10,000 kilometers of roads, for example, in landlocked countries. So I think that's been the traditional role of DFI, to do concessional loans and center on the most commercially challenging type of projects. We've also seen more recently what we call the blended finance things where we essentially bring the concessional and the more commercial together. I'm very happy, in fact, with President Bobissé that we participated in Kigali Innovation City, which is interesting because we've done the part from the concessional perspective, building roads, access road, things that are a bit more difficult from a commercial perspective to finance, and allow other investors to come into other parts of the project. And so really try to blend those various windows. But I think one of the thing that we see developing quite a bit now, and we realize now, I mean, you all have seen the latest COP session, where we see this immense gap between the national defined contribution, what countries need in terms of transitioning for climate financing and in general for infrastructure, and what's available. And there's a clear realization that the debt would not be sufficient, that we need also capital, because that's one way to leverage. That's one way to have a multiplication impact. We're very happy to be, in fact, part of one of the private equity fund, the very first private equity fund from AIF24 Acceleration Fund. So I think this is something that more and more DFI would have to be a bit more cognizant about. And in fact, as my brother Solomon was saying, our role in terms of making sure that we can de-risk also on the equity part. And I'm very excited, for example, this dates a bit, but of the Room to Run initiative by Africa Development Bank, which was in 2016-17. But in fact, that's a great tool. These are some of the innovative tools, and hopefully we'll have some time to talk about, where we can bring some external capital from the Americas, from the Gulf, from Europe, and helping through our role as DFI with our preferred creditor status to be able to connect African projects and global capital in a way. And so we're very excited about this. I think this is a great timing for Africa to essentially leverage and try to really look for new, innovative, capital-focused, private capital-focused type of investments.
Thank you so much, Monsef. And before we move to the next topic, I'd like to give the microphone to Dr. Armando, because the role of Sovereign Wealth Fund is extremely important as we look to unlock more capital into infrastructure. And your case is really inspiring, because you're one of the first Sovereign Wealth Fund to invest beyond your country borders. And I'd be keen to get a sense of you of what motivated this choice. Thank you.
Thank you very much, Iman. Actually, I mean, the starting point is looking to our mandate. We are a capital maximization fund seeking to build foundations for future generations. Then you have to seek higher returns. You have to move out of your comfort zone. So this is what we put in place in our strategy. A well-balanced asset allocation, where we dedicate a part of preserving the capital, investing in investment-grade instruments, but also exploring the emerging market economies in which a number of African countries offer a much better returns comparing to mature economies. Second, we consider it as a leadership role. We have today a couple of $100 billion in the continent, putting together sovereign wealth funds, pension funds, so on. If we do not invest in the continent, international investors will not come in. So we see ourselves as a de-risking mechanism to attract international investors to come into the continent by co-investing, by leveraging the relationship we have with institutional entities. We know much better the market. Our risk perception is different from one outsider, and this gives us a confidence to move on, diversifying whether getting bonds of African sovereigns into our balance sheet, direct investments, invest with the private equities. So we play in that sense. On the other side, we try to exploit the abundance opportunity of the continent. We may not have some sectors in our economy that we will fund in different economies that help us to spread our risk across different sectors, spread out the political risk, the economic downturns, and have a much more diversified portfolio while we seek high returns. Thank you.
Thank you very much, Dr. Armando, and thank you to all for those insights. Let's now shift focus to how changes in investment frameworks and new strategies are shaping infrastructure funding across the continent. And Waitumelo, how have recent amendments to investment guidelines in countries like South Africa influenced the ability of the DBSA to diversify into more alternative assets? Thank you.
Thank you, Amina. As I was sitting here, I was reflecting on a conversation I had with one of the pension funds, and the conversation was along the lines of, yes, you are managing all of these funds for your clients, the contributors, and when they retire, what quality of life would you like them to live? What road would you like them to be driving on? What type of road? What hospital facilities should they be having? What type of education should their grandchildren and children having? And that was the conversation, is that, okay, as we are contributors to these pension funds, how are they contributing to our livelihoods? And the contribution, and the biggest one I see in them making the biggest impact, is in addressing this infrastructure gap, on the infrastructure gap, addressing social infrastructure, whether it's energy, whether it's transport, whether it's digital infrastructure, healthcare. All of these aspects are critical. It boggles my mind, when you have countries making allocations that are at 30, 40% for offshore, just to drive investment, when just allocating even half of that back into the country can make such a big difference. So let me give you an example of what we have done as an institution. One of the things that we identified is the limitation that we have in terms of our balance sheet and our act, where we can only leverage our capital to about 250%. We then created what we call the infrastructure fund, which is a blended finance investment platform, where we actually blend fiscal allocations to specific projects and use that as a base to then catalyze funding from the private sector and institutional investors. As we sit here today, I mean, we started with the platform, I think, in 2021, 2022. It took time for we had to really work with the project developers, your sponsors, which would be your government departments across various sectors. Whether it's water, whether it's education, we worked, housing, we worked across, the various sectors. As we sit here today, we have a portfolio of projects to the tune of $5 billion that have just been, created in this, just with the creation of that platform. One of the things that we have identified as an institution is, for scale and for greater impact, we have to look at investment programs. So a programmatic approach to investment. We have done the One Border Post program that we developed for for South Africa that is currently on an RFP that enables, PPP, opportunity, with our Department of Home Affairs, and border management as well. That will also enable, the ease of move between South Africa and the, and the countries along the border within the SADC, within the SADC region. And instead of doing one by one, the first one went out for 6. Now imagine with that proof of concept that it can work. Imagine what it can do for the rest of the region. And that is the power of, and the impact that this program approach has, and that we have seen work well. How we approach even your global climate funds, for instance. When we go to GCF, we don't go to GCF with one project. We go to GCF with a program to say, this is a program we'd like to implement. Last year, we had the water reuse program being approved by the Global Climate Facility. And that facility didn't just come because we've identified the challenge around bankability and preparation. It didn't come with just implementation funds. It came with project preparation fund. So it's a 235 million facility, for instance, 200 million for project implementation, 35 for project preparation. Now just imagine doing that at scale. So these things, can be, these programs can be, replicated across other regions, at scale, because we have seen it work well in our environment. Thank you.
Thank you, Boitumelo. Let me turn over to you, Monsef, and I'd be keen to get your view from tapping into funding from global investors. And I would be keen to know what are some of the key opportunities that can be leveraged in Africa to attract more global private capital, such as investors from the Gulf countries. What can we do?
Sure. Thank you, Iman. Clearly, I think we've now seen that the power of the sovereign and multilateral would not be enough to address the challenges for the foreseeable future for Africans and for African countries. Can you hear me okay?
Raise it up a little bit.
Ah, okay. Let me just move around then. Is this better?
Yes.
Okay. So we know that capital only for or investment from the sovereigns and from the multilaterals, and also for the private sector in Africa would not be enough. That is something that's very clear. It's been well documented. There's been a lot of discussion about the billion to trillions. And so this is something that is also part of our role, I suppose, is that we've got to play also a better role of catalyzing, of attracting capital from abroad. So let me just quickly, at least, because I see the time running, but from our perspective, at least at Badea, we feel that there's a huge complementarity between our region, the Gulf countries, and the Arab world in general, which are usually energy rich, and Africa, that has enormous potential, but also requires quite a bit of energy. So we're talking also about, we're looking at agriculture as well. I think 60% of the arable land in the world is in Africa. So these are the things where we see complementarity, and we feel that Badea and other institutions, by the way, we're part of something that's called the Arab Coordination Group, which has, for example, the Islamic Development Bank, has OPEC Fund as well. We've had Abu Dhabi Fund, so a number of institutions that have pledged last year 50 billion towards investment towards Africa. And so being a traditional institution that's been bridging the Arab world and Africa, and sub-Saharan Africa, we feel privileged, essentially, to be at the center of this new corridor of economic, or renewed corridor of economic relationship. So we feel that this is something that's going to be all the more important. And you've seen recently a lot of geopolitical plays, and I think Africa should essentially try to get the best out of all these potential relationship at the continental blocks level. And so we'll be very, very happy to, as Badia, to continue promoting this Arab-Africa corridor.
Thank you, Monsef. Now, Solomon, let me bring the conversation back to Africa. We talk a lot about the $2 trillion of assets under management by African institutional investors. How can we tap into that?
Okay, now you're talking, because this is my area of passion. I mean, Dr. Adeshina and I have this, running agreement. He focuses on the global investors. I focus on the African and regional investors. $2 trillion, at least, assets under management, okay? Most of them invested in government securities, 80%, in some cases 90%. So for me, finding a way to really support the channeling of some of that into the productive sectors, especially infrastructure, is absolute. And for us, at least definitely under my leadership, within AFDB, for the private sector, this is going to be a key part of our drivers. Now, how do we do it? I know Armando hasn't sung his praises yet, but for us, it's absolutely essential to work with the African sovereign wealth funds and the African strategic investment funds. They are a gateway to actually mobilizing this. I mean, they are quasi-government, but they are definitely commercially oriented from an investment perspective. Now, the good news is African sovereign wealth funds have departed a little bit from the sovereign wealth fund theory, which is you take your excess revenues and invest it in an uncorrelated market. All of them have a portion that actually focuses really on physical and social infrastructure within a country. I don't think Alain, our brother Obed Amran, is here, but I want to give him credit for creating the African Sovereign Investors Forum, for which both the African Development Bank and also Africa50 are the institutional partners. This is where Obed Amran and also people like Demba Diallo, when he was at FONSIS, came together and said, all of these African sovereign wealth funds and strategic investment funds need to come together in an association. For me, this is one of the most powerful groups, and the Angolan Sovereign Wealth Fund is part of that. Very quickly, I'll look at one country just to show you how we're doing it. So in the case of Nigeria, we're working with the Nigerian Sovereign Investment Authority, which is a sovereign wealth fund. We've created a company called InfraCredit Nigeria. InfraCredit Nigeria provides credit wraps on infrastructure bonds or infrastructure notes for Nigerian pension funds, insurance investment pools to invest in. To date, they've actually credit wrapped over about $400 million equivalent in Naira. So that's one. So for us, this is a very important capital markets driver. We've also invested in the Nigerian Infrastructure Debt Fund, which is run by Chapel Hill Denham, for those of you who know Nigeria. But this is where we've put money in the form of Naira, okay, to actually support, once again, an aggregation vehicle that has expertise in infrastructure and looking to support investments, channeling of pension funds, insurance investment pools, especially from life insurance, into the infrastructure space. But you can't only think about funding. You've got to think about ways in which those bankable projects are created. This is where we've invested equity in AFC, the Africa Finance Corporation, which is our partner, because they also drive project development in that market. But we've also gone further. I mean, in Atlanta, this is where we borrowed from, the ARM Harris Infrastructure Fund. And when I say we borrowed in two ways, right? For the infrastructure acceleration vehicle. We helped create the ARM Harris Infrastructure Fund. And the whole idea why we as AFDB invested was to really be an anchor, an anchor investor LP, to give the local pension funds and insurance investments confidence to actually come and support that, because we vetted the fund manager, we got comfortable with the pipeline, because this is an asset class they don't understand. The reason I'm joking around that we borrowed from that is you hired Opuyo from the ARM Harris Fund, and Opuyo is now with the Infrastructure Acceleration Fund working with Vicent. But these, I mean, in all of this, you can see that our ecosystem partners we're working with. But just imagine if we replicate this, across several markets, including Angola, Morocco, several of the markets. This is how we plan to really crowd in the $2 trillion. And I like what Armando said. If that $2 trillion comes in, then that's when global investments will come after. Thank you.
Thank you so much, Solomon. Now, Dr. Armando, turning over to you. As a prominent investor in Angola and in the region, what do you see as effective strategies to create value across sectors and, most importantly, in infrastructure in Africa?
Thank you very much. I mean, as I mentioned before, I mean, our focus has been to identify new market opportunities across the value chains within the continent. And we believe we could do more as we foster more collaboration, as we bring key partners, as the African Development Bank, South Africa Development Bank, other entities, and be creative, innovative in instruments. One important instrument that I'm strongly focused on is the aging of our local currencies, because the opportunities are there, but you have the proceeds in domestic currencies, except the cases where you invest in mining, where, I mean, the proceeds are coming from stronger currencies. So, I mean, coming up with all those mechanisms, innovate, tailor the instruments to align the expectations of foreign investors and the risk return adjustment of a given projects. I believe this is something that we need to put in place to ensure that we unlock the massive resources that we have in our balance sheets that can be deployed, I mean, generate returns and also support the sustainable economic growth.
Thank you very much, Dr. Armando. Now, Munsif, Badea has a history of catalyzing projects across critical sectors and infrastructure, and this is still under the topic of innovation. What innovative opportunities do you see for investing in Africa in the future?
Sure, Iman. Let me just redirect your question. So in terms of the innovation, I'd like to add a bit to what my brother Solomon said in terms of innovation. What can we do to innovate, and especially to, in the catalyzing and attracting capital. I think sometimes the role as DFI, you don't need to do things that are that complicated. Just showing the example, showing the fact that this can be done, can reassure the investors. And for that, I'd like to, I'm not sure if people from BOAD are here, but what we did, for example, is help them issue the first hybrid capital to help them themselves. They're quite important in terms of infrastructure. And the fact is, hybrid capital is not that complicated. I mean, it's been in the corporate world for 20 years maybe, so it's a very well-known instrument. But for DFI in particular, it was not something that was very acceptable. And we think that the role as a DFI is to show that, no, this can be done for DFI as well. There's different rules, so we work with rating agencies to make sure that this would be acceptable. But this is one avenue of innovation. We don't need to be, coming up with moonshot things. Sometimes are just in front of us. The second type of innovation, obviously, are sort of more innovative instruments, and Solomon had mentioned a number of things. So we talked about securitization. That's something as well that can help attract external investors, and especially reassure them, because there's always this link with the DFI, so that's very important. But the other innovation that I see, and I want to make a shout out to the team of Africa50 here, especially on Asia, is sometimes innovation in the business model itself, not so much in instruments. The team had essentially thought that investment infrastructure has different obstacles, right? And so what they did is very systematically analyze each of those risks and try to find an adapted solution. And I think it's remarkable, because essentially they've split that into project preparation, which my sister had mentioned before is a key issue of finding bankable project and assigning this to the right type of investors or people that can take that risk. You have also, they've split that in project development. So this is the hard part. This is the construction and development. This is where you take the biggest risk. And this is where us DFI can essentially de-risk that portion. And then essentially project financing, which then can be offered to on a more commercial basis with maybe a lot less risk. As I mentioned, some of these projects, especially in Africa, are quite attractive from a risk return perspective. So there's a blend also of innovation that we can think of as DFI, and it doesn't have to be that complicated. Sometimes the tools are here, but we need to adapt it to the DFI world, and we need to adapt it to the needs of Africa.
Thank you very much, Monsef. And I'm realizing we're running out of time, so apologies, everyone. But I'd like to ask one final question to Boitumelo. And as a key financial institution, what are some of the partnerships that can be leveraged in Africa to attract more private capital into infrastructure? Thank you.
As you have heard, Imani, in the room, the solutions that sit in this room, whether you're talking project development, talking partial guarantees, whether you're talking a programmatic approach to investments and looking at the various models, the answers are in this room. The examples have been given. In our partnerships as institutions, which we have demonstrated on numerous occasions, is where these areas of excellence are. You know, I believe in the concept of, and we have seen that concept, you know, build big economies, you know, being a successful copy. It's better to be a successful copy than a failed original. So in our partnerships, in us building our partnerships, let's together replicate what we have seen work across the geographies so that we can achieve the scale that we desire. Thank you.
Thank you very much, Boitumelo. And before we get to the closing remark, I think, you know, we're all aligned, and this discussion has made it even more clear. Unlocking infrastructure investment in Africa is both a challenge and a tremendous opportunity. De-risking strategies and innovative partnerships are paving the way to attract institutional investments. But I think Africa must also mobilize its own capital. This is about more than funding. It's about ownership and shaping our continent's future. So with that, I'd welcome closing remarks from Mr. Solomon to start with.
I mean, I'll just pick up from where you ended. You know, in other words, the responsibility of African institutions to really shape their own destiny. I mean, I've spent time in the UAE looking to attract Gulf investors. You know, the smallest ticket size on a project is $100 million. Otherwise, there's no real interest. It doesn't make sense. So we need to leverage African institutions. And once again, Dr. Armando has been very conservative. For me, the novel game changer African institution are really the sovereign wealth funds and the strategic investment funds. They are the best de-riskers. We can support as the AFDB, but we need somebody, or we need an institution that can support in real time. When there are issues, they know how to get to government to explain it in terms that the national governments really understand. They are organizing themselves, to be a single body. So for me, working with them to really mobilize the $2 trillion to get in to de-risk projects and then bring in the global investors when we're expanding is really the way to go.
Thank you very much, Solomon. Dr. Armando, please, some closing remarks.
Thank you. Perhaps identify 3 accelerators. I mean, the first, we need to leverage more the role of DFIs, Africa Development Bank, World Bank, and this is more on bringing more agility of those institutions and coming in on blending finance mechanisms. For instance, sovereign wealth funds are very interested to explore grants to de-risk projects, to improve operations of the project, so on. Second, I believe we need to increase the role of the African institutions in the global decision-making of infrastructure investment. Last not least, we need to work more on mechanisms of climate finance and the sustainable infrastructure. Make those mechanisms available to ensure that we strengthen our projects, our venture in bringing other partners to work alongside us. Thank you.
Thank you very much. Monsef?
Thank you, Iman. I'll be quick because I realize I see this flashing red now. I think just very simply, we discussed a number of solutions, but I think that the main point is that our role as DFI cannot be static. And there's a changing constraint, changing world, changing needs from African countries. And in general, it is incumbent upon us as DFI to respond to those changing needs, be flexible, be nimble, be innovative, as Armando was saying, and essentially step up so that we can really answer and be there present for our fellow citizen in Africa. Thank you.
Thank you very much. And last but not least, Boitomelo, for your final inspiring comments.
Thank you. Mine is a quick one. Let's believe in ourselves as institutions, and let's believe in each other as institutions. Thank you.
Thank you very much. Thank you. Let's give a round of applause to all panelists. Thank you. I'm almost finished. Before we move to the next panel, I have the pleasure of announcing that our latest investment vehicle, the Africa50 Infrastructure Acceleration Fund, has reached another important milestone during its fundraising phase. With that, please help me welcome to the stage Mr. Vincent Legonou, Chief Executive Officer of the Africa50 Infrastructure Acceleration Fund, for some quick remarks. Thank you.
Thank you very much, Iman. Good afternoon to everyone, and welcome to this signing ceremony for the Africa 50 Infrastructure Acceleration Fund. So the fund has as a mandate to invest in equity projects or companies across the continent, and it's part of the Africa 50 group. We were pleased to report a few months ago that we had reached first close for the fund at $222.5 million with 17 investors, 16 of which were African institutional investors. And it is unique in the history of the industry. So worth noting, and I would like to name a few of them. Of course, Africa 50 as the sponsor of the fund. All the panelists who were there before, or most of them, so the African Development Bank, the sovereign funds of Angola and of Nigeria, the BOAD, the BADEA, but also a number of private sector investors, a number of which are in this room. I saw Atijuri Bank in the room, MAMDA, MCMA from Morocco, CDG Invest as well from Morocco. So we've continued our fundraising efforts, and we expect to add much more African institutional investors over the next few weeks, months, and I can tell you that we will exceed 20 of them shortly. So we thought it was an interesting opportunity to have this signing ceremony during the AIF Market Days to welcome two new African institutional investors who will join us shortly. And one of them is the Development Bank of Southern Africa. And I would like to invite its CEO, Madame Boatumelo Mosaka, to join us at the table for the signing. And thank you very much for your continued support. The second investor I would like to invite at the table is a Pan-African group active in the telecommunications, energy, finance, real estate sectors across the continent. This is the Action Group, and I would like to invite the CEO, Hasnan Iriji. So we will proceed in a few minutes to the signing of the relevant documentation, after which our guests will have the opportunity to say a few words to the audience. Thank you very much.
Thank you very much again. Thank you, but the discussion is not over. We're moving on to our second panel. So I'll invite you to please go back to your seats. Thank you very much. Thank you for listening in, and let me hand over now to my colleague, Jay. Thank you.
Okay. Okay, good afternoon, esteemed guests, ladies and gentlemen. Welcome to our second panel. I'd like to invite the panelists to come up. My name is Jay Katatumba. I'm an investment director at Africa50 Infrastructure Acceleration Fund, the vehicle that was just recently supported by so many investors recently, and by DBSA and Axion Group. In this session, we will explore how partnerships, technology transfer, and capacity building can accelerate the growth of Africa's renewable energy sector. I'm honored to be joined by an exceptional panel of leaders and experts who I would like to invite to join me to take their seats for this critical conversation. So first, I'd like to invite Ms. Anita George. Please give her a round of applause. The CEO of Prosperity and an independent director at International Solar Alliance, who has extensive experience in renewable energy and sustainable infrastructure. Second, Dr. Daniel Schut of the African Development Bank. Third, Mr. Ambroise Fayol of the EIB, European Investment Bank. Fourth, we have Mr. Youssef Rouissi of Attijari Bank, Deputy General Manager of Corporate and Investment Banking. And fifth, we have Mr. Antonio Munguambe, who is Executive Board Member of Electrification Portfolio at EDM, Electricidad de Mozambique. Please do join us and take your seats. I will go over to the side. Okay, so this round focuses on setting the scene. And it's serendipitous that we are in Morocco, where the framework agreement and first signing of the International Solar Alliance for COP 2022, I believe in 2016, was signed. So, Anita, the International Solar Alliance is a major player in global solar energy. Could you begin by outlining the key challenges Africa faces in scaling solar energy?
Thank you very much. It's really a privilege to be here with all of you today and with my esteemed panelists. The International Solar Alliance, and I have to say that I am an advisor to the International Solar Alliance. The alliance itself is a treaty-based organization with 120 members, of which 46 are from Africa. And they have had one very clear mandate to increase the deployment of solar and everything it takes to make that happen. So your question, Jay, of what the challenges are, actually we spent talking to more than 100 different institutions, developers, consumers, companies, organizations, to really understand what was happening on the ground. ISA itself has spent many years and has people, and I may actually call out to Joshua, Wycliffe, Barakat, Pragya, who are all here with us. And these are people who have been developing and implementing solar projects across the globe. And therefore, they bring the technical experience. So one big point of, I think, challenge has been you have to see it to believe it. And as Ms. Musako explained earlier, that demonstration impact of actually seeing projects that are on the ground and can be done is very, very important. And ISA brings that to the table across the global south. A lot of knowledge sharing, etc. A second very important aspect are the regulatory frameworks. And as you mentioned and was mentioned in the panel earlier as well, we have a lot to learn from each other. And the focus really is on how to deploy solar where the dominant energy mix may be fossil fuel and thermal or large hydros. So this is another very important aspect that has to come into play. The third is really both debt and equity financing. And here also ISA plays a very critical role. So they have had a viability gap funding, which actually brings in that element of blended finance to cover the viability gap. But the important distinction is that it's a partnership between governments, ISA, and the consumers who benefit from the project. The fourth, I would say, is in terms of bringing in examples of the most difficult part of the value chain of solar, which is distributed renewable energy. And there's been a lot of talk through the past several months, ever since the AIF24 and the World Bank announced Mission 300, talking about connecting 300 million people in Africa by 2050 to electricity. That, if you translate the numbers, it's 60 million every year for the next 5 years. And that's about 5 million every month of connections. To do that really requires a huge partnership effort. And this is what the Global Solar Facility of ISA is planning to do. And I'll talk more about that maybe a little later. But Jay, to answer your questions, I think there are solutions to every one of the challenges. The facts on the ground are that out of $300 billion that have gone towards solar, only $3 billion has come to Africa. And Africa has actually 60% of the world's solar installation. So that begs the question, how do we get more to come here?
Mr. Ambrose Fayol, the EIB is the lending arm of the EU and is the world's largest multilateral lender and the biggest provider of climate finance. So I only think it makes sense to come to you next. how is the bank supporting sustainable investments specifically across Africa, particularly in sectors such as renewable energy, to ensure long-term economic growth and development?
Thank you very much, and many thanks for the invitation. So indeed, the European Investment Bank is the Bank of the European Union, and we are financing projects in particular dedicated to climate and environment, not only, but in particular to that. Most of what we do is inside Europe, but we do 10 to 15% outside and 10 to 15% of close to 90 billion euros. So we are a big bank. What I would like to say is what we do is the first question, and with whom? The first question is, my answer would be, don't be too narrow in what you finance. And the second question I would be, build partnerships, otherwise you will get nowhere. On the don't be too short and too narrow in what you finance, I mean, there are plenty of ways to help Africa, as was said clearly in the introduction, who has contributed more or less nothing to climate change and suffering the most from it. There are plenty of things that you need to do. And that's what we try to do. It goes from renewable energy projects, be it solar or wind, or even geothermy in Kenya that we have done in Olkaria, to grids, to transport. When you do a new line of BRT in Dakar or elsewhere, this is a contribution that is very much helping not only actually climate, but also the people who live there. And of course, not forgetting nature and biodiversity. And there, the most recent example we have in financing is a great project in Côte d'Ivoire, 150 million euros for deforestation. I mean, the fight against deforestation, and the objective being to increase forestry size by 20%, which is really significant. The way we look at it is either there are big projects in itself. For example, big hydro, like Nachtigal in Cameroon. There, this is a very big project. Anyway, you will have many requests for finance, and you need the support of big institutions. But there is another way where our institution, because we have a high level of capital, we can help, which is how to make scalability of things that are small at the beginning. And there is one example that I would like to give, which is, I just spoke with Alain Bobissé on that before, WeLight in Madagascar. Actually, the president of Axen was there. This is an off-grid project in rural areas of northern Madagascar. Villages that have electricity for the first time, they never had, and they pay a price that is much higher than what they would have if they would be with GIRAMA, the public institution. The difference is there are no load shedding. They are 24/7 available. And actually the heads of the village, when you meet them, they tell you, well, it's costly, but actually this is profitable for us, for our families, for the schools, and for us. And then you see the potential for scalability, how you can expand this in much broader scale. In a nutshell, what we do is that, with whom we build partnership, of course, with our fellow institutions, especially the African Development Bank in Africa, development financial institutions. I mean, for example, the big wind project, the biggest farm for wind in Africa is in Kenya. It's Lake Turkana, has been financed with the support of the African Development Bank. But we do a lot of private sector business also with banks, because they have a knowledge of a network that we don't have. And I said that at the opening, but frankly speaking, this is very successful to do a loan to a bank who is going to lend to SMEs for making small renewable energy projects. That's really helping the transition in countries like South Africa. And of course, we do a lot of our business, because we are a European institution, thanks to the support of the European Union and with our European fellow counterparts in development finance institutions. And I think this is this combination of trying to do a lot of different things with a lot of partners that in trying to strengthen the partnership that you can do, that is helping your contribution to the energy transition.
Thank you very much. Daniel, I'm going to come to you. The AFDB has been a major financier of energy projects in Africa. Could you highlight the bank's role in shaping policy reforms to improve the investment climate for renewable energy, and share an example of a successful initiative?
Thank you very much, and it's a pleasure being here. Thanks also to Alain for organizing this session. Let me just highlight 2 quick points I think that are very important. We talked about the energy access deficit, and if we look at the SDG 7 tracking report released this year, it's the first time in a decade that actually the number of people without access to electricity in Africa increased. So we're not on the right track, and so this is why we need this acceleration to do more. And the second thing is, if we look at last year, 2023, it's a record year worldwide in terms of new renewable energy generation capacity, yet only 1.6% of that has been in Africa. And even if you look at sort of the last kind of decade, most of those investments, more than 60%, were just in 4 African countries: South Africa, Morocco here, Egypt, and Kenya. So there's a lot to be done in other parts of the continent. And I think this is really also where the African Development Bank has a key role to play to help de-risk investments in all African countries, not just in the ones that already are successful in attracting investments. How are we doing this? We focus both on policy de-risking and financial de-risking. So on the policy side, let me just mention 3 examples. One is sort of on the regulatory frameworks, and Anita referred to it. We are now releasing on a biannual basis our Electricity Regulatory Index, ERI, which is a benchmarking tool for regulators, energy regulators across Africa, but also highlighting what are the gaps on the regulation side. And then at the same time, we're trying to mobilize from ourselves, but also from other partners, technical assistance to address some of those bottlenecks on the regulatory system. And that's already sort of having an effect of being a benchmarking tool around which sort of partners rally, and also where the regulators sort of see a competition. You know, we want to be higher next time the Electricity Regulatory Index comes out. A second example is our policy-based lending, and Solomon referred to it earlier. For example, in South Africa, we approved last year a policy-based loan linked to South Africa's just energy transition. And that really tackled sort of a number of critical support areas, like the amendment to the Electricity Regulatory Amendment Bill in South Africa that's sort of critical for attracting more investments into the market. So these policy loans can really help to address and trigger policy reforms that are critical for attracting more investments. A third example I want to mention is sort of in the context of our Desert to Power initiative, which is focusing on some of the most difficult markets, countries such as Burkina Faso, Mali, Niger, Chad, Mauritania. We've been working together with the African Legal Support Facility on developing a common protocol for independent power producer project, IPPs, that also has a number of standardized documentation that we'll hope will be adopted at the ministerial meeting next week, including a standardized template for PPA, concession agreement, interconnection agreement, etc., so that there's a lot more predictability for investments around that. The second thing is obviously our focus on financial de-risking. And this is where we have a strong focus on project preparation, project development, co-anchoring the Alliance for Green Infrastructure in Africa, but also bringing sort of that catalytic capital, the blended finance, which is critical for many of the power transactions that we see on the continent. And here we have particularly our Sustainable Energy Fund for Africa. It's the bank's largest in-house blended finance facility, able to take sort of junior positions in new innovative funding structures, like 10 million in Nigeria, like anchoring the first fund focusing in clean cooking, like Spark Plus. Many other examples, but also bringing in concessional debt that can be blended with the bank's private sector financing, and has been critical to bring a number of transactions to financial close. One example I want to mention, because you asked for a concrete example, it's one that has also been championed by the Africa Investment Forum, is our Facility for Energy Inclusion. It's kind of conceptualized by the bank as a debt finance platform for kind of the small-scale renewables, whether it's mini-grids, solar home systems, commercial, industrial, solar. It's a blended finance structure where the bank mobilized concessional resources from the European Commission, from Germany, from the Clean Technology Fund, the Global Environmental Facility, and then anchored other investors around these concessional tranches. Now, FEI has been operating through two funds for a number of years now, made almost 50 investments, leading, hopefully, when all of them are implemented, to 12 million improved or new connections, and also creating alongside 28,000 jobs. I think that's a concrete kind of example of where an institution such as the African Development Bank anchored sort of a critical facility that addressed a market gap. And I think we're now sort of looking, if I think about the energy access space, a couple of years ago, there was a shortage of debt. Now there's a clear shortage of equity, so that's sort of another focus that we're concentrating on at the moment. Thank you.
Thank you very much. Youssef, the Attijari Bank is facilitating private sector investments into renewable energy by provision of many strategies, including cross-border financing. Can you please share which ones have been most effective?
Well, first, thank you very much for your invitation. It's a privilege to be here. Thank you, Alain. Thank you, all the colleagues, for your kind invitation. Actually, this topic is at the very core of our strategy as Attijari Wafa Bank, which is a Pan-African institution that has grown its business from its Moroccan historical base. And we've grown the business from the Moroccan hub to expand in 15 countries in Africa, being present globally in 27 countries, and having a strategy which is really to be part of the socio-economic development plans and programs of every single country. So when we go into a market, we go and target the retail, the SMEs, the corporates, the multinationals, and of course the infrastructure, which is a very key pillar of our strategy. And as a result, we now are deploying a kind of $70 billion balance sheet into massive infrastructure programs that we serve, whether in Northern Africa, Western or Central Africa, and mainly in the renewable energy that represents 1/4 of our portfolio when it comes to project finance. And we have financed in the last years around 3,000 megawatts, especially on the renewable energy. And we do that because we are convinced of the potential. We all know the demographics in Africa. We all know the gaps in terms of energy satisfaction in Africa, where we need to at least double the ratio in terms of GDP that Africa allows to its infrastructure, whether renewable energy, infrastructure, ports, airports, and so on. And so what we are trying to do as a banking financial institution is one, to really have a comprehensive dialogue between all the stakeholders, whether the private sector and the public sectors, in order to set up sustainable public-private partnerships framework, which is at the very basics of any financing that can be done in order to set up a viable framework in terms of PPP and having a sustainable scheme that can enable financial institutions to jump in. And then we work also on aggregating the pools of liquidity because, as you know, we have many challenges in terms of financing. In Africa, the banking penetration ratio is no more than 15%, which is quite low, actually. And we are facing also some hurdles in terms of maturities beyond 10 years. when it comes to infrastructure, this is also a challenge. And so we need to face these challenges and to also see how we can unlock the financial hurdles in the financial market, because if you take the asset management industry, it represents only 2% of the African GDP. So you have massive resources that needs to be channeled to financing. And so what we are doing is to try to to aggregate syndication with the local banks, commercial banks, regional banks, and DFIs, and to partner and to set up in large syndications. We have spoken about Nachtigal. We were part of Nachtigal. This is a 14-bank syndication consortium along with commercial banks and DFIs. We have been accredited by the Green Climate Fund also to try to channel long-term concessional lending with additionality to renewable projects in Africa. We try also to look to the sovereign funds, and we try to advise some governments in Africa, like the Ivorian Coast government, into financing the rehabilitation of the Cocody Bay, which is at the center of Abidjan. And we have managed to raise $300 million from the sovereign funds in order to finance this specific project. So this is a kind of complex aggregation of different pools of liquidity that we channel to the projects. And as I said, unlocking the financial market is also key. And our experience is that we need also reforms, and to sometimes with tax incentives to unlock the resources when it comes to asset management. In Morocco, for instance, asset management is representing 60% of GDP. We've grown from 0 in the mid-90s to 60% today. And it is serving as long-term savings to finance the infrastructure programs in Morocco. And so we can duplicate it, we can continue this discussion beyond. One final point I would add is that beyond the big projects, we need also to work as a bank to support the transition with our SMEs and our corporates, which is very key. And that is why we are working on several initiatives, such as the Africa Energy Efficiency Fund, that makes, I would say, some kind of environmental auditing into the companies to identify exactly what are the drivers for energy efficiency, and that invest into those funds. We try also to partner with the private equity firms, such as the Africa 50 Investment Acceleration Fund, because we are convinced that through the partnership between we need this additionality in terms of equity, in terms of know-how, in terms of bankability, and the bank loans in order to complement. And the last thing I would add is that we need to connect the international community with Africa when it comes to sponsors, when it comes to investors. This is also something we try to do with our coverage hubs in Europe, in the Middle East and Asia, and support those investors in better assessing the risks in Africa, better understanding the environment, and supporting their project finance and financing schemes. Thank you.
Thank you. Thank you. Antonio, you're the only utility being represented on this panel, and I'm sure you'd have some contributions to make to this topic. EDM is actively working on Mozambique's rural electrification strategy. Could you elaborate on the role of local utilities in integrating renewable energy into existing grids, and share how technology transfer partnerships have supported this effort? Basically, what do you agree with that the aforementioned speakers have said?
Okay, thank you. First of all, I want to say thank you to African 50 to invite us to participate in this panel. Sure, EDM is playing a very important role in electrifying the country. We have the challenge by 2030 to cover the whole population in Mozambique. For sure that renewable energy will play a very important role to electrify the remote areas, not only, and bring to our generation matrix a more green electricity. We likely, in the southern region, we are the only country bordering at the same time with the 6 countries. So we can play a role if we take the opportunity, that the resource that we have in the country to generate that renewable energy, so we can feed, we can contribute to the region to absorb that renewable energy. so they can move from the fossil fuel generation into the green generation. So the technology plays a role so that we can improve what we can generate in country so far. Thank you.
Okay, so I'm going to pivot and perhaps ask a question to Anita, and it's a follow-up question. You mentioned partnerships. What lessons have you learned from recent projects that you've worked on where partnerships have been instrumental, and how does it shape the future partnerships you might be looking to?
Thank you. I think one thing that we have learned from long years of experience of investing is having local partners who have feet on the ground, a deep understanding of what's happening at the regulatory level, in the financing level, is very, very key. And this is especially true when you're making investments, not just in terms of getting returns, but also making an impact on the ground. So an example, I'm actually going to talk about something very exciting that we've launched on, which is the Global Solar Facility of the International Solar Alliance. And basically, it is a model of partnerships across the Global South. And it's a model of partnership at the permanent capital parent level, where grant funds have been mobilized. And it works with local partners on the ground. And maybe I can give a sneak preview to say that the first regional facility of the Global Solar Facility is in Africa, being launched. And the Africa50 has been selected for all the reasons that you've already heard, as the local investment manager who will be managing this fund. So I'm actually very happy to be here, because to all the four gentlemen on this panel, this is a great opportunity for you to invest alongside Africa50. So what is this partnership model is that the Global Solar Facility provides 4 products, one being a risk mitigating product. And the good news is that this risk mitigation is not duplicating what the existing development finance institutions and others are providing. So we could have, for example, AFDB's partial guarantees being offered. We already have a signed agreement with MEGA, where MEGA will put all its payment guarantees on offer. So you may ask, so what does the Global Solar Facility do? What it does is that it provides an added layer of protection which enables these institutions to bring down the costs. And by bringing down the costs, the projects become affordable for those who are benefiting from this distributed renewable energy. The second is low cost, that is no interest loans for insurance. And as the extreme weather events increase, this has become really a big issue where insurance has become more expensive and more necessary at the same time. So this low-cost insurance product will enable projects, especially on the distributed renewable energy space, to have an insurance. And here again, it's a partnership model, Jay, because what we are saying is any private or public insurance provider can put their insurance product on offer. What the Global Solar Facility, and in particular the Africa Regional Facility, will do is provide a low-cost way to acquire that insurance cover. The third product is equity. As was mentioned by several people, equity is key and it's scarce. and no debt comes to a project unless you have equity. And here again, the Global Solar Facility will make an anchor investment into the fund being managed by Africa50. And the idea is that this anchor investment will enable other equity investors such as AIB and AIF24 and others to come in and build on that anchor investment. Last but not least, which you mentioned, Daniel, as well as the gentleman from EIB, that we need the regulatory frameworks. You mentioned it as well, especially connecting mini grids and what happens later when the grid reaches those remote areas. So these type of regulations are already in place. How do we share that knowledge and make sure that we introduce them in different countries? And I'm sure Mozambique has very good examples as well. So that regulatory support through technical assistance, again, here we are not trying to replicate what's being done. The ISA is working with COMESA, with the World Bank, and with others to bring in their resources and their experience and to provide this very important element. So coming back to your question, this is really a model of partnership that crowds in. And the last point I'll make is that we are developing a digital framework which will make it very easy for fund managers like Africa50 to tap into everything that's available that can de-risk projects and help in aggregating projects so that the end goal is that it achieves the scale where institutional investors can come in and invest at scale.
Thank you very much. Can you please join me in giving our panelists a round of applause? Thank you very, very much for taking the time to come here and be with us. I would like to ask our panelists now, there's going to be a signing that is going to take place. So I would like to ask Mr. Joshua Wycliffe to come up and make a few remarks while our panelists take their way to take their seats. Thank you very much.
Ladies and gentlemen, as we settle down, it's my great privilege and honor. I want to thank my partner and friend, Alain, and his team for giving us this partnership opportunity to work mutually together as we take this partnership relationship forward. as we are aware, I mean, I was sitting through the last two sessions and I was listening with a lot of intent and interest. And a lot of what I wanted to say was said, and I have not much to say this afternoon. Just that I observed that the global investments into energy alone in the last year has crossed over $3 trillion. And I'm amazed to note and say that out of which $2 trillion went towards renewable energy. That's an amazing amount. And which is about, if I note, twice the amount of what has traditionally gone into fossil fuel. So that's the kind of investment that the globe has seen in 2024. And I also note that about 500 billion plus to date in 2024 has gone towards investment into solar PV. So impressive amounts. However, looking at what's gone into Africa and to the developing countries where 65% of the population of the developing world lives today, it isn't as great, it's this small. And all the reasons as to why it's not happening, we heard across the two panels that we were listening to. And this partnership that we're about to sign is just exactly that, to address those issues and those areas of concern for Africa. And this global solar facility that my colleague partner who spoke about, Anita, who spoke about the global solar facility, which is a global facility. We first have started off, kicked off in Africa. We've already done one marquee project with the DRC, the Republic of Congo, at Nuru Energy, producing 50 megawatt plant and supporting them in that. So, like Anita said, with the investments going in, the risk perceptions are being taken care of. So we're so encouraged to work with Africa50 to being able to realize this dream of the global solar facility across the continent, to be able to draw more of such projects that de-risk, that provide support, investment support, and of course, to a large extent, hand-holding. And interestingly, I also heard about another issue that was linked to the lack of investments. One of them was bankable projects in Africa. So when you look at bankable projects, the International Solar Alliance has very cleverly built in a SolarX program. Again, Africa benefited from this whole program for the first. So the globe's first ever SolarX was launched in Africa with 20 winners. And there again, I have some of the 20 winners here. I think 10 of them have turned up here to this forum, investment forum, and I was glad to see that Africa50 was engaging with them as well in being able to look at the projects and how these bankable projects could be invested as well. So the International Solar Alliance has given a grant funding of $15,000 to each of these 20 winners. We got more than 200 applicants addressing 10 problem statements. And this successful move has resulted in about 20 quality projects, bankable projects that have come from Africa alone. And so it's been so successful that we have also had, with this history, we've launched this in the Asia Pac. So the lessons learned in Africa is being replicated and put in place and emulated in other parts of the world. And my colleague Pragya, who's sitting across, she will be launching the same in LATAM as well. So Africa is leading the way there in how we have learned. And this partnership with Africa50, I expect it to grow, not just 1, 2 projects, but many, many more projects. So this terms that we are going to be signing today will address the areas where Africa50 and ISA would partner together in being able to not just raise the investment, but also raise the advocacy level in being people coming to know, organizations, institutions coming to know of not just the good work, but the effective work that's being carried out in Africa and the rest of the world. So I want to thank Alain. I want to thank my contemporary COO from Africa50, who are all here with their teams for making this partnership a success to date, and we look forward to many more successes in Africa. Thank you.
I'd like to invite our COO, Tsipidi, to come up and mention a few words, please.
Thank you, Jay. Ladies and gentlemen, today is a very special day for us as Africa 50. It's a special day because the theme of the past 2 days and the next few days in the marketplace is really about leveraging partnerships. So as Africa 50, we're partnering with International Solar Alliance to address what we think about as Africa 50 every day, the urgent need of electricity access to over 680 million citizens, the urgent need of many African citizens across the infrastructure space. So this for us, Joshua and the ISA team is critical. It's incredible what it is that we're doing. It's innovative what it is that we're doing. And I think importantly for us, it's about South-South partnership. It's about innovation through the blended finance facility that we're doing, the catalytic capital that the government of India and other philanthropies are bringing to the fore. It's a $200 million facility that we're looking to catalyze private sector capital for. So thank you very much for this partnership. We can't do this alone, and it's through these effective partnerships that we do things at scale and at speed. So Joshua, I think you can join me up on stage. Jay, am I taking over your role here? Okay.